Hello, everyone, and welcome to the Money Flow Weekly Market Newsletter Report. I'm your host, Dr. BJ Love, and I'll be bringing you this week's update. Here at Money Flow, we use time-tested methods and indicators that helps us to navigate these markets with confidence, clarity, and calmness. Now, this report is for the close of Friday, June 26th. So let us get right into it. The market sent investors mixed messages this week. While technology stocks suffered their sharpest weekly decline in nearly a year, money continued to rotate aggressively into the industrial sector. The rotation helped push the Dow Jones Industrial Average and the Russell 2000 to fresh intraday record highs for the third consecutive week, even as the NASDAQ experienced a significant correction. In today's report, we'll break down the technical picture for the Dow Jones, the S&P 500, the NASDAQ, and the Russell 2000, the volatility index, crude oil, gold, silver, and Bitcoin to determine whether this pullback is a signal for further downside action. Now, and we will also examine SpaceX, the recent IPO, which has attracted considerable market attention and is beginning to establish its trading range as investors evaluate its post-IPO price action. Despite the broad technology sell-off, several individual names continue several, individual names continue to demonstrate impressive relative strength, and they are Digital Turbines, ticker symbol APPS, is maintaining a strong momentum following a recent breakout. BlackBerry continues to attract buyers as institutional interest improves, and Butterfly Network remains one of the strongest momentum stocks in the healthcare technology space, supported by exceptional volume and continued accumulation. Now let's go ahead and dive into these charts to see where institutional money is flowing next. Now, uh, we always like to emphasize that price tells you what is happening. The volume tells you how strong institutions believe in it. Every day, every trading day, big money leaves a trail, and that is what we want to master with the Money Flow um, newsletter. The challenge for traders and investors is learning to recognize those footprints. And I believe we have a pretty good handle right now on recognizing those footprints. And we'll show you what we're talking about here in a minute. And volatility creates opportunity. So even though we watch the VIX, and we always say on the broadcast that as long as the VIX is below that threshold of 20, volatility seems to be controlled, and the market seems to grind higher. But when that volatility goes above 20 and stays there, then you will see the breakdown of the major indices, and we will adjust accordingly. But for those who are prepared, and big money leaves a trail every day. Now, this is prepared for client distribution. This is not investment advice. This is for educational and informational purposes only. So let's go ahead and switch over to our weekly chart. This is our 4 grid, where we use a proprietary color-coded background to give us the long-term signal as to if we are bullish or bearish. Now, long-term signals dominate. I repeat, long-term signals dominate. Short-term signals fluctuate. So now, if you've been with us for a while, you understand um, how we judge the markets here based on historical data that we have been using for uh, years and years. I just use, oh, excuse me, 3 years of data. And you can see that we had the green background from 2023 in early July, and we kept it all the way up to 2025, almost a year and a half. Then we had a brief dip where we have a red background. This tells us now that the market is in a long-term downtrend or a bear market. And then we have our confirming indicator here, the MACD, that helps us to confirm that. So now here, since May of 2025, over a year, we've had a green background. We see that each one of these price bars here represents 1 week of time, and our method that we use, as long as the price is above the rising moving average, we are technically in a long-term uptrend, and that is where we've been. This gold line here represents a 10-week period moving average, and our gray line or black line represents a 40-week moving average. So as you can see, we're still in the green background. Our MACD gave us a warning here back in February of this year, and we started to decline for about 4 weeks. 1, 2, 3, yes, 4 weeks. However, we did not remain there. Price started to move back above these rising moving averages, and our confirming indicator, the MACD, gave us a positive momentum shift, and that was on April the 20th of this year, and since that time we have moved to all-time highs. Now, what is taking place over the past couple of weeks, and what happened last week, is we had a little bit of a downturn. So let's keep our framework in mind. We are still above a rising moving average, even though we had a down week for the S&P 500. Our MACD is giving us a signal that there is a slowdown in upward momentum. And as I forestated, we wanted to see if the decline is a signal for further decline. We don't see that in the S&P 500. It's showing a little bit of a topping formation here. However, the background remains green. We still remain positive, and that is the S&P 500. We already mentioned that it did have a negative week. Moving on now to the Dow Jones Industrial Average, you see just the opposite. Green background, long-term upward trend. Long-term trends dominate. Short-term trends fluctuate. Our confirming indicator here, our MACD, is showing us that there is really no slowdown. We got an all-time high last week in the Dow Jones Industrial. Now, moving on to the NASDAQ, we're going to see quite a different picture. We hit an all-time high about 3-4 weeks ago, slammed down, kind of leveled off this week. That was the tech sell-off that we talked about in the introduction. We do see a slowdown in the MACD, in the momentum, but there is no real technical evidence here that we are in any trouble for a uh, bear market. We're still in a long-term bull market, according to the Nasdaq and the S&P. We're going to take a look at the Dow Jones, and we'll look at the Dow Jones Industrial. We're going to look at the uh, Russell 2000. Where are we? There we go. Russell 2000 hit an all-time high last week. So we have a mixed signal. We have two of our major indices that are showing a little bit of a slowdown, well, what I would call a shallow pullback, and two of the major indices are showing bullish continuation. So now with that said, we're going to look at the other um, equities that we talked about, that even though we had this shallow pullback, that are showing some signs of strength. Oh, we need to look at oil. Oil here, this is a weekly chart of oil, but it's just looking at a different platform. As you can see, we use the same methodology here. There's a rising moving average, and if the price is above a rising moving average, we have some other indicators here that I don't have time to explain right now, but you can see oil is now below a long-term moving average. It closed at $70.70. And these other indicators that we like to use are showing, especially with the relative strength, are showing that there is possible more, there's a high probability of more downside price action in oil. We want to look at the VIX, and the VIX is showing a very mixed signal. It closed at 18.41, still below that threshold of 20. And usually with that reading that is below 20, markets tend to grind higher. What else do we want to look at? We want to look at Bitcoin. Bitcoin is just in a free-for-all, seemingly just down, down, down. And we want to look at gold and silver. Here is gold. Gold is what is in a configuration that we refer to as a death cross, when you have a lower moving average go below the higher moving average, and it's just each candle that is red represents that this is a down week for gold. Then we want to look at silver. Silver. I can just put it in /SI. Silver is in the same long-term downward configuration. High probability of it will continue to move down. Okay, so we've looked at oil, we've looked at Bitcoin, we've looked at gold, we've looked at silver, and we're going to look at now the other stocks that have been showing very, very good promise doing this mixed signal. First one is APPS. And as you can see, it has very strong upward momentum, huge volume. We like it a lot. It's in a very strong sector. I'm going to go ahead and remove these signal lines here, but we like it on the daily, on the weekly, and we like it on the daily. It just broke out. Next, we're going to look at BlackBerry. On the daily, it just broke out. Let me go ahead and remove these sets so we can see it clearly. This is our daily, this is our weekly, and one of our methodologies that we like to use is when the daily and the weekly are moving in the same direction, we have a strong trend. And last but not least, we're going to look at Butterfly, BFLY. And as you can see, it's breaking out, and that's our time every day.